Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so yesterday, we got the break that a lot of people have been looking for. We'll have to see now that we're down here. You look at the hourly chart. The key for us, and I did a couple updates during the day over on Twitter and Instagram. We were short in the overnight, and then you had this rally back to the weekly pivot. That holds. Had a nice deep short, and then we spent the rest of the day. We traded this long off of the first hit of the monthly pivot, which was nice, and then we spent the rest of the day just shorting against monthly pivot, getting a nice deep move. We shorted monthly pivot resistance overnight, had another nice one down. So I mean, it's been a good day. It's been a good couple days, good couple weeks. The key takeaway though for everybody out there is I think we get a reflexive bounce. The reflexive bounce needs to hold at 66. Certainly 66 to 70, which is right around where the daily pivot comes in, which is the dotted purple line there. Ideally for the bears, you want to continue to see this hourly mid-band. We've talked about this in the past. That started the acceleration yesterday. It was resistance overnight. On a move back up into here, which would be around 58, you'd want to see that hold. If we get that off the open, that would be interesting. If you make a morning high there, that's even more interesting to me. The bears don't necessarily need to keep making lower lows today. What they need to do is defend the pivots and defend the key areas that they worked so hard to break yesterday. The typical pattern that we've seen over the years is that the bears have these big days and then they can't follow through. So for me, follow through would be closing below the monthly pivot. Even if we chop around here all day, I would expect it to be a pretty wide range of chop. It's been a really nice market to trade this morning. But if the bears can close below monthly pivot, certainly if they can close below 53, which is the daily lower band, I think that would be a real statement of their intention to potentially follow through. So you've got the 50-day exponential moving average coming in here as well, right around 63. So 63 to 66. Here's your lower band, right around the 53 area. Longer term, intermediate term, today for me is all about where we close. So keep an open mind. Trade the bounces, trade the longs, but understand that they are most likely counter trend and they're sell rallies. Okay? All right, I'll be back with another update around noontime, and then we'll wrap it up into the close. Respect risk, and if the volatility keeps up, take your profits where you find them. Don't overtrade it, but take advantage of volatility while we have it. All right, have a good one. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.